Hello and welcome to Ray, Result Analysis for You. This is the Money TV series where we bring you the stories behind the numbers by connecting you directly with the management of listed companies. So, today we are going to speak with the management. The company's name is Choice International Limited and its CEO, Mr. Arun Poddar, is with us. This company is listed on the NSE and BSE main boards. And today, Mr. Poddar is joining us to discuss the Q3 results. Mr. Poddar, thank you and welcome to Money TV.
Thank you, Karunya, and I'm really excited to meet you and interact with your viewers and everyone. Really thank you to Money TV for inviting me on this platform. Thank you.
So, as the name of the show is Result Analysis for You, let's come to your numbers. In Q3 FY25-26, your company has reported a revenue of 303 crores, which is about 10% growth quarter on quarter and shows a 45% growth year on year. How did you deliver such an impressive performance? What were the key drivers? Which business verticals helped you deliver such a solid performance?
So, Karunya, since this is our first interaction, I also just want to share some of the highlights, which will give you a brief overview about the organization and everything. So, if you see, at Choice International Limited, we work on three major business segments. One is broking and distribution, the second is advisory, and the third is NBFC activity. So, if you look at the last 5 years, our CAGR growth in terms of revenue has been more than 50% consistently. So, this number is not a surprise in terms of YoY growth. So, we were in line with our past performance and all. And if you talk about the last quarter, the revenue was over 300 crore rupees and PAT was over 65 crore rupees. So the major contributor again was the broking and distribution team with 58%, almost 28% came from the advisory business and 10% from the NBFC business. In our advisory business, there are two kinds of segments. So one is investment banking income and the second is that we are assisting governments with their mission, project implementation, guidelines and all that. So that is the key area. Certainly, equity broking and distribution have led the numbers and all.
Okay, great. Because you talked about the PAT as well. So, if we talk about PAT, profit after tax, even there, quarter on quarter and year on year, we have seen a strong improvement. Along with that, the PAT to revenue ratio has also increased by about 15% and has reached almost 22%. So, this margin expansion that you have had, what are the factors behind this? Is it more a result of cost optimization, or is the impact of operating leverage greater, or is there any other factor that has driven this growth?
The reason for operating leverage is more. Last year, if you look at the average daily turnover with only the Choice platform, then on a year-on-year basis, there is about 27% growth in terms of average daily turnover. If you talk about quarter on quarter, then there is a growth of 20% in terms of average daily turnover. In the last quarter, we had an average daily turnover of around 1200 crores. In the last quarter, we had an average daily turnover of around 1426 crores. So, one of the reasons why we got growth of around 8% in the equity broking segment. And second, as I told you in the beginning, we assist the government in our advisory business. So, last quarter, we had an assignment in the government advisory piece which we executed. So, that also had a revenue segment. So, certainly, these numbers are only from the operational average or operational aspect. There is no kind of any one-time transaction or anything like that.
So, is this government project an ongoing project, or was it done and delivered?
Yes, so that project has been successfully delivered, but as of now, also in Choice, one of the subsidiaries in Choice International Limited, Choice Consultancy, we have an open order book of over 800 crore rupees. So we are actively assisting the government in their consulting project. And you can reasonably assume that it can get booked in approximately 3 years. So we have about 800 crore open order book. I can very proudly say that Choice is the most rightly placed organization in that area. The kind of credentials we have, the kind of team we have, the kind of knowledge we have with the government. So we are a strong player in that segment. In investment banking, today we have 37 mandates in hand. and we are expecting a revenue of around 9,700 crore plus. We are going to do fundraising in the next 1 year.
Okay, great to know that. And for this journey of becoming a homegrown Big Four, we will all be watching out for that. How choice plays out and how your business plays out. But if we talk about the revenue for the first 9 months of this fiscal quarter, that has already happened. It's been 9 months. The revenue mix of broking and distribution was 58%, advisory 28%, and NBFC 14%. If you compare it with the previous year, which vertical has shown the fastest growth in these 9 months? And do you see more potential for further growth in the future?
So, certainly in the broking and distribution segment, it has always been our anchor product. As an anchor business, we feel that it will continue to be a mainstay for the organization, both in terms of revenue stream and at the PAT level as well. It will contribute in the same ratio. We can say that the contribution is around 60%. In the next 2 years, we are expecting more growth on the broking side. On the broking and distribution side, our wealth business is merged with broking and distribution. So, basically, Choice Wealth is a subsidiary of Choice Equity and Broking. So, we are focusing on wealth. It is a certain equity. Broking and distribution will continue to lead for the next 2-3 time again, like we have been expecting the same thing from the beginning, that this is where we will see major growth.
Okay. And in the coming years, do you think your revenue mix can become more diversified? Or you have said that in the next 2-3 years, broking and distribution will drive the growth. But if you see long-term vision, so what kind of mix and diversification do you foresee across revenues?
In continuation with the growth, our ideal mix at the group level, our internal targets and thought process, according to that, we reasonably expect 40% from broking and distribution, 40% from the advisory business, and about 20% from banking and NBFC activities. Certainly, when I talk about significant changes in the revenue mix, I am not compromising on the growth of equity and broking distribution within that mix. This growth will continue as it is, but the ideal mix we are actively working towards is 40% from broking and distribution, 40% from the advisory side, and 20% from banking activities.
Okay, understood. You have also mentioned that in the next 3 years, you have a roadmap to reach every district in India. What is the strategy behind this expansion? Is it to become one of the Indian Big Four or to be a leading broking and distribution player in the country? Please tell us a bit about this hyperlocal strategy, and in this, your current branch and franchise network so far. What is the current status and how do you plan to increase penetration?
Yes, Karunya, I would like to share a few things with you. Even today, the Indian consumer, the Indian customer, is more connected to a brand where they can see its physical presence. If you look at it today, there are about 8 to 9 crore, and if you had all the PANs, then around 12 crore Demat account holders. Regulators believe that by 2030, this number will reach 30 crore. Now, metro cities have reached a decent level of penetration. A vast wave of new retail investors who are set to enter the equity market will primarily come from smaller towns and cities ranging from Tier 3 all the way to Tier 6. Now, the Indian consumer's fundamental mindset and inherent nature is such that they naturally connect much better with brands that are prominently visible right in front of them in their daily lives. If they have any issue, they can go there and discuss it directly. So, that is our gross business principle. As of today, we have around 200 offices and we are working with about 1,700 registered franchisees. Certainly, in the next 3 years, our target is that by the end of 29, we will have our own office in all 806 districts of India. At the district headquarters level, any client-related query, interaction, or discussion can be handled there. I have one more thing to add here. I would like to inform you that recently we have added a new business. So, Choice Wealth has tied up with India Post Payment Bank. India Post is India's largest distribution model. There are about 160,000 physical locations. There are around 4.25 lakh employees. And today, they have 12 crore financial transaction customers. For the next 5 years, Choice will be the exclusive service provider to India Post. And in those 5 years, you can see that the customers, around 12 crore, are directly associated with India Post for savings bank accounts, for RFDs, and for executing the government's insurance schemes. We are expecting a big chunk there. We are making a significant contribution. Through India Post and through other government financial institutions working, we are expecting that in the next 3 years, we will be among the top 5 players in the industry, on the wealth distribution side and on the broking distribution side.
That's a very interesting model. So, your plan is to expand through India Post. And physically, have you marked any outlay for this expansion?
Yes. So if I tell you the revenue mix, normally if we talk about 30 to 60 cities there, on average, there is a maximum monthly outflow of around 3 lakhs rupees. And in our experience so far, we have comfortably crossed break-even within 5 to 6 months. Technically, if I talk about 800 branches, then you can reasonably say that the total capital outlay for the 800 branches we have carefully planned is around 75 crore rupees, which will help us to effectively drive a physical expansion. But because of the revenue mix or revenue model, we will recover it very smoothly. Because today, as a Choice platform, you have multiple diversified revenue streams. Because of that revenue stream, its overall viability will be faster and better.
Okay, and the tie-up with India Post is already executed?
It's already there. It's on the exchange platform as well. So we have won the tender. India Post had issued a tender and we won it. So the agreement has already been done.
Have you started seeing any incremental orders from their revenues?
So you can say that the revenues are already there. In 6 months, it will be at the technology integration stage and the knowledge transfer on ground will start from Q2 onwards. We can say that from Q2 of financial year 2026 to 27 onwards, we can expect a decent number of account holders, both in terms of assets under management growth and overall revenue growth, especially in the wealth-specific portfolio.
Okay, this conversation was very insightful. But before we wrap up the conversation, is there any parameter or update related to the quarter that you would like to highlight for your investors who are watching this conversation?
So Karunya, one of the key achievements that I mentioned to you last quarter is India Post. One is that we have, as I told you, Eloza Consulting. So basically, in the government consulting space, we are a well-positioned consulting firm in India, and our credentials are strong. In the last quarter, we acquired Eloza Consultants. With that acquisition, our experience and credentials in the railways and highways sectors have grown significantly. If you see, in this budget, a budget of approximately is 12.5 lakh crore has been announced for infrastructure. So, we are seeing a major opportunity there. So, a major acquisition of Eloza has taken place. Plus, on the wealth distribution side, we have almost taken over a distributor through to inorganic growth initiatives. So, both inorganically and organically, we have options on both fronts. In every aspect, we have been growing well with strong CAGR growth over the last 5 years. We will maintain that growth, and if everything goes well, we will deliver even better results. We are very hopeful about that.
Wonderful, and all the very best for achieving your plans and targets. Thank you so much, Arun, for speaking with us today and for sharing your company updates and insights with our viewers.
Thank you, Karunya. It's a great pleasure to talk to you and your customers. Thank you very much.
Great. With that, we wrap up today's episode of Ray, or rather, the result analysis for you. Do like, share, and subscribe to Money TV for more insightful conversations. Until next time, invest smart and stay informed.